So hi everyone, Christine here from Smarter Property Investing. Today I want to share something with you that is really important to me and I feel it's really important to you. Please take time, listen to this and understand I'm going to talk about capital gains tax. Yes, it's boring, yes, it's a tax, but capital gains tax as investors costs us money. And I want to teach you to save money in this, so please bear with me. Okay, so in today's world, if you have an income-bearing asset and you make money out of it and you sell it, we have to pay capital gains tax. Yes, I get it. We don't like taxes, but you've got to pay capital gains tax. In today's world, where we are given a 50% discount on capital gains tax with the current government. If you own that property or that income-bearing asset for more than 12 months, we get a 50% discount. I really like that as an investor. But what I'd like to explain to you is if we change government, that tax is going to increase, and it's going to increase by thousands. And when I say by thousands, I mean it's going up by 50%. Yes, that's a lot of money, and if you bear with me, I'm going to do some numbers at the end of this so you can understand. But for those that have already invested and have already signed contracts and have held property for many years because you've done this to contribute to your retirement, your lifestyle, your future, to gain money, I congratulate you. We're about to come into our next election in Australia on the 18th of May, and my biggest concern is if we change government, it's going to cost us more in capital gains tax. Yes, there are lots of things that they're talking about, and yes, I agree and disagree with some and agree with others, but capital gains tax as an investor, for me, who's trying to build wealth for my future so I'm not dependent on the government, is really important to me to save money. So I'd like to share with you how you can save money if you are entering the market, or if you are thinking about getting into the market, or you've actually been in the market and you want to start buying more property. If in actual fact you buy property today, in today's world, I'm recording this in April 2019, you are entitled to our current government's legislation of a 50% discount in CGT. If in actual fact you sign a contract on the 19th of May after our election, and if our government changes, that's going to go up. So, yes, you don't have to go around and, be really stressed about having to settle something before the 18th of May. As long as you sign a contract on the 18th of May, on or before the 18th of May, you'll be entitled to today's 50% discount. Yes, the land may not title for 12 months or even 24 months, but you've signed the contract on or before the 18th of May. It is extremely important to understand that. I'm not here to rush you into anything. I'm not here to say that you've got to go out and buy the next thing that you see on realestate.com. But you have 2 or 3 weeks to gather your information and make a decision. And I think in today's world, 2 or 3 weeks with the amount of access that we have to knowledge is an amazing time frame. So let's get back to the numbers, because I've said that I'm quite passionate about this. If in today's world you bought a property perhaps 10, 15 years ago, congratulations, and you're about to realise that you're about to sell it, and you made a $400,000 gain. This is straight maths. I'm not taking tax deductions into it. I'm just giving you straight maths because, of course, I'm not here to advise you on tax. I'm not here to advise you on what that final amount would be. But as a layman, I'm giving you basically the process of how to work this out. So you would need to talk to your accountant to get the actual figures. But you've made a $400,000 gain, and the government now gives us a 50% discount as long as you've owned it for over 12 months. So that means we're only paying tax on $200,000. Yes, it sounds a lot, and yes, you would pay thousands on $200,000. You may have a 50% share in a partner, it may be quarters or whatever, but you would be paying capital gains tax. If in actual fact our government changes and you realised a $400,000 gain, if you signed a contract after the 18th of May and you made a $400,000 gain down the path, you wouldn't be paying capital gains tax on only $200,000. You'd be paying capital gains tax on $300,000. It's going up by 50%. We've got this amazing media out there. We've got television, we've got social media, we've got so many ways of finding out what's happening. And the marketing is saying capital gains tax is being reduced by 25%. They are very quiet in saying the discount is being reduced to 25%. But in actual fact, it means it's going up. So we've got some very clever marketers out there that maybe aren't getting through to us, the layman, to understand that it's going to cost us more. So get back to the $400,000 gain. If you make a $400,000 gain, you get a 50% discount, which realises you're paying tax on $200,000. If our government changes and you make a $400,000 gain post the 18th of May in your income bearing asset, you'll actually pay tax on $300,000. So tax on an extra $100,000, I'll leave it up to you to think how many more thousands and thousands and thousands you'll be paying. If you're investing in property for your future, to not have to live on the pension, to provide for your children or your grandchildren, this is really important. It just makes sure that you don't have to work harder, save harder, to not pay that extra tax on that extra 100,000 or many 100,000 gain. Look, I'm really happy to talk about this. I know it may be really confusing. Math is something that I understand, but it's more important for me to get this message out to you so that you do understand you have got time to make a decision, you have got time to find out more information. Please, you either contact me and I'm happy to share this with you, or if not, please talk to your accountant, find out what they're going to say to you. And please don't just go on realestate.com and buy the next property. Gather the information, make an informed decision, and I can only hope that this helps you to reduce the amount of tax that you pay, but enjoy your investment property journey and get out of it what you expect, and I hope that's lifestyle. Thank you. Look forward to hearing from you, and the number is below, 1300 736 754. Bye.